Welcome to this week's episode of the podcast. This week I'm talking to Beau Cook, who's a mortgage broker from Loan Market. Last week I spoke to Wayne from Professionals just to get an idea on what the property market's been like during 2020, which has no doubt been, for some people, a little bit tough. But so I thought it would be a good idea to get a mortgage broker to have a chat about, I guess, how current lending is at the moment, given the circumstances. Some people have lost employment, others have been cut back, and a whole bunch of changes. So I thought it would be a good idea to get him on. So I'll just get him to introduce himself first off.
Yeah, cool. Hey, thanks, Elliot. I'm Beau, loan market broker for about 4 years. Prior to this, work on railway, so yeah, just jumped across doing an accounting degree. Started mortgage brokering, haven't looked back.
So what's the current state with lending from your perspective, from how you see it? First of all, I guess from people looking to borrow money, how have banks sort of reacted to what's going on at the moment?
Yeah, look, it's still pretty much a lot of business as usual in a lot of instances. Still employed as you were prior to COVID. If you're still working the same hours, not in an affected industry, things like entertainment, aviation, tourism, all sort of frowned upon at the moment in the lending world. But if you're in a safe job, been working there, good employment history, making all your repayments on time on any other debts, it's really quite similar. Things like overtime, bonuses, commission income sort of affected a little bit. Banks are a bit more wary to take on the full sort of cost of that or full income of that. So they're shading that down a bit just to allow for, income that may be impacted that you haven't earned yet. But otherwise, it is generally more of the same, to be honest. Seeing a lot of activity at the moment. So
obviously you mentioned people who have been affected with particular industries. As you mentioned, tourism. My wife, Sarah, she's an event manager, so they've been affected. What's been, I guess, the options for the people that have been affected currently?
Yeah, so for people struggling with financial hardship and whatnot, a lot of the banks are offering home loan pauses, essentially. You literally just stop making repayments on your home loan for up to 6 months. And that's, there was no questions asked for a lot of banks. Others just wanted to sort of know what was happening and make sure there wasn't going to be too much risk for them in 6 months, hopefully that you'd be able to return to work. But that's been the big one. The options to make interest-only repayments for a period of time there also, just to ease the burden of the home loan. But that's the main things the banks have been really looking after. And then obviously all the government subsidies come into play, which has helped a lot of businesses stay open.
Yeah, so obviously things, when you look around other places around the world and how they've sort of been impacted by what's going on, if you sort of take a step back and look at the bigger picture of what's going on here in Australia, you probably realise that although for some people, it may seem pretty tough, overall it doesn't seem to be as bad, would you say?
Yeah, right now things are, I think the government made a few really good decisions. Potentially some of them were rushed, but, they've gotten us through a really tough time. I do believe the next few months could be quite interesting as things sort of get peeled back and, we're sort of trying to return to some sort of new normal, I suppose. But right now, I think we've come through pretty good at the moment. It'd be an interesting few months there to come.
Yeah. So you say things are basically back to normal for, I guess, people with stable jobs and stable industries where they haven't lost, any income or anything like that. At the same time, there's been a lot from government in terms of incentives in order to get Aussies into the property market to get their first home. One thing I talked about with Wayne last week was that he was talking about how he felt as though there wasn't really that much of an understanding from a lot of the purchasers. They sort of see the news and they just think, oh, look, the government's offering us this. That means I can get the loan now. So from your expertise, just roughly how are the incentives working with lending at the moment?
Yeah, so the incentives are a funny one, actually. So the big one, I suppose, for a lot of first home buyers is the first home loan deposit scheme, which essentially you come in with a 5% deposit. The government will guarantee a further 15%, which means you're sort of only borrowing 80% against the total security, which means you don't have to pay mortgage insurance, you get better interest rates, things like that. It was quite a good plan, good scheme. Issue with that one was it was capped at 10,000 spots. Those spots are all completely booked out across the country now. So now we wait sort of until next July for another 10,000 to be released. But that was a great scheme. On top of that one, we've got the first homeowner assistance, which is the stamp duty reductions. So up to 650,000, you pay no stamp duty. Then between 650,000, 800,000, you pay a bit, but it's still discounted on a sliding scale. So from 650,000 or 655, you might pay 1,000, and then by the time you get to 800,000, you're paying full freight on stamp duty. Then on brand new, up to 800,000 is no stamp duty, and then vacant land up to 400,000, no stamp duty as well. You got the home builder as well, helping with construction. That's a $25,000 grant for any owner-occupied building of any owner-occupied house or major renovations, $150,000 or more. That one's an interesting one. The $25,000 can't be used as funds to complete, so you can't actually go to a bank and say, I'm going to have $25,000 down the track. The bank can't accept it. So that grant is paid directly to you, and the bank won't accept. They know the money's coming, but they won't accept it as something that you'll use. So you'd still technically have to borrow that $25,000 up front. So it's a bit of an interesting one. It's a bit of a pain. People looking to purchase and use that as a deposit, we can't use it as a deposit. So that's probably the big one for me as a problem. And then beyond that, you've still obviously got your first homeowner grant, which is $10,000 for anything brand new under, I believe, 700,000.
Yeah, I think I remember looking at the cap on
750.
that.
It was a bit low for most of Sydney, but for units, obviously, it was pretty good. But yeah, so that's there as well.
Yeah, so you speak to a lot of clients, a lot of purchasers. How many of them actually understand a lot of, what you're talking about? How many people come to you and you probably have to spend a little bit of time trying to explain to them?
Oh, everyone. It's too complex and everything's new. Everything's it's changing so rapidly at the moment. There's a million schemes. No one's on top of it. It's absolutely not something you'd ever come to a broker, and the broker should never expect you to understand that. There's a lot to it. So a lot of what I'm doing at the moment is just sitting down, education almost for appointments. Absolutely love it. Like it's really good. We go out in 6 months' time, we might see the same person again, and they're ready. They know what to expect. No one fully grasps it at the start. You're not expected to.
Okay, cool. So so obviously that's one of the positives of using a mortgage broker is that they're able to sit down with you, and if there is any questions that you have, they're more than willing to help explain. Outside of that, are you finding how many sort of people looking to borrow are coming to you and they're sort of still not in the position to do so? And if they aren't, sort of what are you advising on them to do if they are still not able to borrow money?
Yeah, I find about half aren't ready. And then we just sort of sit down, look at income, we talk about budget. And it's a funny one. Most people obviously know they should have a budget. Most of us just don't. So it's always good to have that discussion and say, look, this is what things are going to cost you every week, and it's eye-opening a lot of the time. Sometimes it'll be less, sometimes it'll be more, but it's really good to get that out in front. And then we can kind of say, look, well, you could probably save this amount of money. If you're renting, we say, look, a mortgage will be this much more, so you probably need to get comfortable with paying your rent and being able to save an extra couple $100 a week to be ready for a mortgage. And it's really eye-opening. And then they build up that savings account. We always have a goal, like a figure to get to as a bare minimum for a deposit. And then we talk about the grants and things that are available, but obviously those things can change as the economic climate sort of changes around us at the moment. Coming out of pandemic, you imagine a lot of those things will stay just to keep supporting the economy. But things are definitely changing all the time. But no, look, we really try to get them prepared, and sometimes it takes 24 months before someone's ready. Sometimes it can be amazing, like a surprise, and someone's got options there they just weren't aware of. So it's always good to meet and just have a chat and figure out where you're at.
And when you come across a client who you say, look, you're not in the right position now, we may have to wait 6-12 months. Obviously, a lot of people are impatient. They want to buy a house yesterday. What have you been able to get a hold of these people maybe later on down the track and see where they're going? What have they done? Have they gone somewhere else to try and, I guess, get someone to tell them what they want to hear? I mean, what's that been like?
Yeah, look, you get a mix of people, obviously. Some people are just happy with the information there. And like if you present it properly, a lot of people understand. As long as you're honest, people trust the information, I find 9 out of 10 times. Definitely are people that probably go elsewhere, but, being a broker, we're pretty lucky. You've got, a really broad range of products to access. And, it's very rare if we can't do it here that somewhere else might be able to now. It's there's no real cowboys in the industry anymore. It's, straight down the line. If you can't, you can't. It's, yeah.
And do you find that the lending has been more towards, because of the incentives, towards the newer builds, or is there still a lot more people looking for more established property?
I'm finding a real good mix at the moment out where we are. There's obviously there's a fair bit of development coming on with units and things. So I do find a lot of first home buyers, a lot of single people really happy with buying units using that first home loan deposit scheme, coming in with a 5% deposit and they get to buy their own place. But there's still a lot of demand for established, a lot of people moving. So like sea changes, seeing a couple of those now. Obviously, a lot of people getting used to being able to work from home. Commute to work isn't a thing when you can successfully work from home. So, yeah, seeing a bit of everything still, to be honest.
And what about refinance? Like people, obviously at one point we've locked into a particular rate. Rates are very competitive at the moment. How have you found that in terms of trying to get your clients lower rates with the refinance process?
Yeah, look, it's been pretty good. Like at the moment, fixed rates for owner-occupied places starting like 1.99%, which is just crazy low. So doing that's really good. A lot of banks are also cooperating with just renegotiating their own rates, so not necessarily moving banks. Sometimes a lot of people want to just because they're fed up and angry with their current bank, but a lot of times the current bank is actually offering some decent rates as well. So yeah, definitely seeing banks are happy to keep good borrowers on their books, and there's definitely credit available for good borrowers as well.
And also, we went through that ourselves. Our term was coming up on our interest rate, and for us at that point, it was easier. It was just easier to remain with our bank, but they were able to still offer us a pretty, a pretty good deal, better than what we were paying. So, just what you said there, like the banks are really starting to, I guess, up their game and trying to retain a lot of their, current borrowers, which is probably what they should have been doing, a long time ago.
Yeah, I think I've never understood like why. I suppose a lot of people are just happy to sort of set and forget, and that was I think a few years back as well, we had really expensive break costs and things where it was very hard to refinance mortgages. But now, being able to move your bank, I think that was a few years ago. It was a government thing. They abolished break fees. Like that's. I think up until then, a lot of people were like, well, we're stuck here. But now banks are sort of coming on board and realizing, it's costing us money to keep losing clients. We're better off just offering decent rates at the start and then just sort of maintaining a bit. But look, it doesn't happen all the time. Some banks are still charging way too much for some people that just aren't looking enough. It's always definitely worth a second opinion.
Yeah. So the industry itself, a lot of rule changes, just a lot like things that are probably going to make the process a little bit longer for yourselves, to try and get borrowers to borrow the money. How has that been sort of adjusting to some of that change yourself?
It has been an adjustment. I think though as well, it was a very broad change. So a lot of like the aggregators, like the loan market, you've got Aussie, Mortgage Choice, everyone sort of was investing in tech and things. And a lot of companies stood up and came up with solutions. So, we do require a lot of documentation now. We do require a lot of information, but getting the information is a lot easier now than it was 12 months ago even. It's a lot more streamlined process. Everything can be done electronically. Even now we're starting to see mortgage documents can be signed electronically. No more paper documents, no more, post. We're really starting to revolutionise. But yeah, obviously prior to COVID, we just come off the back of the Royal Commission for Banking. We've got a best interest duty now, so mortgage brokers have to act in the best interest of clients. Before that, it was pretty poorly worded. It was just, we had to offer products that weren't unsuitable, which it was very loosely worded, but now it has to be the best thing for the client, and it has to be well documented. And yeah, I actually really like it, and it's not nearly as bad as it sounds.
Yeah, probably also designed to maybe weed out some of the more, I wouldn't say shonky, but some of the maybe not so professional brokers who probably did, probably did things that they probably shouldn't have been doing when it comes to getting borrowers the money that they were after. So I guess in a way that's probably what it's also done as well, has it not?
Yeah, it definitely should have. You've got to be able to justify things. Producing fraudulent documents and things is very. I don't know how people do it. There's a lot more checks. And we're sort of 2020 now, and everything's electronic. The ATO can see everything. Banks check everything you tell them. I think a lot has changed to sort of, as you said, weed those people out. There's not many of those left now. I dare say they're still around. All the brokers that interact with other brokers, though, you never hear of stuff like that. It's the ones that no one hears of and no one speaks to that's probably doing it because, as a whole, the industry doesn't want it. We're remunerated well enough that, we just need to do what's best for the client, and that's all that matters. That's how you keep your businesses successful and keep everyone afloat.
Yeah, no, that sounds good. So just for anyone who may be listening who, I guess, a first home buyer, looking to save up a deposit to purchase their first home, they may probably take advantage of the incentives. What would you say would be some advice, some tips that you'd be giving them if they're sort of just starting in the beginning of that journey of saving? Yeah,
definitely look at your own budget, look at your own spendings, and even if it's not where you want it to be, just really take note of what you're spending every month. It really can be eye-opening how much you spend in some places, and you just think, wow, that's too much, and we could easily cut back there, I think. And then, budget to save. I think that's a really big one as well. Don't just save whatever's left at the end of the week or the fortnight. Pay your savings first. Pay it straight away. Don't be scared to divide your money. You don't need to have one bank account. You could have 4 if it works for you. Put your savings somewhere. Put your direct debits one place. Put your groceries. Put your going out money somewhere else. Don't even be scared to use different banks if it's too easy to access money, like take you from your savings. But yeah, definitely just know where your money's going. I think that's a really big one to start off with.
Is it also an idea to understand that it might be a little bit of time-wise, you may be looking at a bit of time to save up? Obviously, there are incentives out there, but still, there is going to be a time factor to take into consideration.
Yeah, look, definitely. If you are able to take advantage of that first home loan deposit scheme where it's the 5% deposit and the government look after the rest, if you're buying property up to $650,000, you've got to come up with $32,500 plus conveyancing, so maybe $35,000. It is a lot of money, but 9 months from now, depending how much you're saving a week, and if you're living at home with your parents, working full time, maybe you can do that in 9 months. It's everyone's situation is different, but 5% is definitely the first goal, savings wise. And look, the more the merrier. The property market probably isn't going up drastically anytime soon. I don't think we're going to have a drop, but I don't think we're going to see those boom prices we had 4 years ago, where things went a little bit crazy. So you got time on your side. Just save, just go at your own pace, set your goals,
Would that sort of be the same advice you'd be giving to people who may be looking to refinance their current mortgage, or would you sort of be maybe adding a few different things and advising with them?
Yeah, refinancing, I just wouldn't wait. Talk to someone straight away. If there's problems, if something's not going to work for you, you can find out early and you can fix them. Well, even if you don't want to refinance, I think it's important just to get ahead of your own mortgage. Just spend money, on saving, putting more in your mortgage. Talk to your bank. Say, look, you're going to leave somewhere else. What's the best rate you can do? If you don't want to talk to a broker or go see a banker or something, just a simple phone call can put money in your pocket as well. But refinancing, just take a step, take action, don't wait. It would be my advice there.
Yeah. And let's say in terms of refinance, let's say someone is looking to refinance, looking to maybe draw down a little bit of equity in the property. You know, has that been, how has that been with your experience? Has it still been something that if you are like in an unaffected industry that it is quite easy, or how has that been going?
It's definitely doable. Not as easy as it was 12 months ago. When I say easy, not as many lenders are happy to do it without question. There's lenders that are still happy to do it without asking too much. You know, if you've got equity there, happy to give it to you if there's enough of it. Other lenders, if you're a bit tight on equity, maybe not touch it. Really, it's a very individual situation. You know, if you've got a $600,000 house and you owe $550,000, you're probably going to really struggle to get much out of that. You know, but if you've got a $600,000 house and a $100,000 mortgage, you know, anything up to $300,000 probably really easy. Maybe even up to $480,000 really easy as well. Just depends on going to the right bank. Yeah, that's really important.
So, and obviously, as you mentioned there, like the LVR that you've
yeah,
got,
that's right. Yeah, so 80% is usually the safe spot. Even then, some banks just refuse to give cash out, but up to 80% is good. Over 80%, you've really limited where you can go to get out more money out of your mortgage.
And are they quite? Do they ask questions about what the money is to be used for? Are they quite strict in that respect?
Yeah, above 80% guaranteed they want to know. Things like debt consolidation is pretty safe. Cash out for things like maybe holidays and just funds that the bank can't control, I suppose, they're very strict on. It's a bit hard above 80%. Even under 80% it can be hard. But things like renovations and things, quite happy to fund. But yeah, anywhere where there's a lot of cash out that could just sit in your account, the banks can get a bit funny. They're just a bit worried about what that money's going to.
And you know, we've been talking today, and there's quite a lot to digest for someone looking to borrow
Of course.
money. A lot of information, and even if you do try and do it yourself, you know, by going onto Google or, you know, trying to educate yourself, some people can do that, no doubt. But I'd say more or less, there'd be a lot of people who you know, it's just a whole bunch of numbers, a whole bunch of rules and regulations, and it's really can be quite confusing and little bit daunting. That's probably one of the advantages of mortgage brokers is that, you know, you've heard Beau talk about basically everything in relation to borrowing. So if you are a little bit confused, unsure, obviously mortgage brokers, they're more than willing to sort of sit down and go through everything with you.
Yeah, absolutely. I think that's across the board. Any good broker will be happy to give you their time. If you're willing to give yours, you know, sit and listen, discuss plans. Most brokers would be more than happy to do that. And there's a multitude of things, a multitude of information. First home buyers, always my favourite one. They come in, my neighbour told me this, my friend told me this, my colleague told me this. And, you know, like sometimes good information is probably very relevant to the person that told the information, but maybe not for you. Everyone's circumstances are individual. Offset accounts are my favourite. Everyone says get an offset account, but if it costs you $400 a year and you've got no savings, offset account maybe not the right thing. Like it's, you know, everyone's different. You just need to know what's right for you.
I think that's a very important point that you made, because I think it's of a lot of things. Someone will say, hey, I did this, and then the other person think, oh, well, I can do that too, but it's definitely not the case.
Absolutely. Like we have builders. Builders are my favourite. Builders have high cash flow businesses. You know, they can have enough cash sitting in a bank account to offset their whole home loan. So they swear by by offset accounts and things. And there's lots of strategies that work really well for them. Investors with interest-only loans, again, you know, really good structures at times for the right situations and the right people, but they're not for everyone. Like it's just a multitude of options, and getting the right advice is just set you up so much better long term.
Yeah, and once again, that's the good thing about mortgage brokers, because then they're not going to be giving you advice or trying to tailor anything because someone else did it. They're going to, depending if you're honest enough with the information that you're presenting to the broker, they're going to be doing all they can to get what's best for the for the borrower, which has always been the case, isn't it?
Yeah, absolutely. Doesn't matter to us what bank you go to, what product you get from that bank. It's just a matter of it working for you. We want you to be happy long term. If the neighbour comes to you and says, "Oh, you should have this," and you come to us and say, "Why didn't you sort that out?" We should be able to say, this is why it doesn't work for you. Long term, straight away, we've lost all that trust we built if we stuff it up at the start. So, we've always got that expectation, always got that requirement to be honest up front, because otherwise it will eventually come out. And you have a home loan for 20 years. I'd love to have all my customers for 20 years, all my clients 20 years. It's pointless to just do something stupid for the short term.
Mm-hmm. And just coming close to finishing up, do you find that some borrowers are maybe still not presenting everything to you? Like, you would probably have a lot of situations where you go and, try and get a borrower a loan from Bank A, and then Bank A will find out something that you weren't aware of. And it's like, oh, well, why don't you tell me that? Do you find that some borrowers are still maybe not quite as honest with things that they probably should be?
I think more than anything, I don't think they're purposely dishonest, but I find they just forget about things. Things like the GEM Visa cards are a big one. It's interest free, so it's not, because most people don't think of it as a debt. Like, they don't think it's not a loan. I can pay it back, but it's not costing me anything. Zip pay, afterpay are big ones. People always think, it doesn't actually cost me extra, so it's not a liability. In the eyes of a bank and things, they straight away think that's a loan. Like, that's going to hurt your borrowing power straight away. But no, I think most people are very honest nowadays. I think we're really starting to get people understanding there's no point lying. Like, we'll do what's right for you. And the bank's going to find out if you don't. A lot of times you could honestly forget, and if we can't explain that you did forget, the bank will just go, "We're not interested in working with you." It's not worth anyone's time to hide information anymore, because they will find it.
Because the excuse of, "Oh, I forgot about that," that doesn't quite work when it comes to borrowing money, does it?
Very rarely now. We do all the checks we can. Credit checks pull up everything, so we can sort of, before we even go to a bank now, we say, "Oh, do you remember what this was from 4 years ago?" And most of the times there's a very perfectly innocent explanation, but we just need to be upfront and on top of it before we go to a bank and say, "This is the applicant. Here's everything they want you to know, or everything they can tell you."
We're just finishing up now. I'll have all of Beau's contact details in the show notes and in descriptions and what have you. Just finishing up, obviously 2020 being, something that I've never experienced. Just first your thoughts, just overall thoughts on how things are going, and sort of where you think things may go, maybe heading into end of the year 2021.
I think 2021 is going to be the telltale of it all. I think we're holding up okay now. It's really dependent on, I think Christmas will be a big one, obviously a big spending season. You see a little bit at the moment, people are buying things they normally wouldn't, things like caravans, boats. There's just a lot of extra money around right now. I think once that starts to get pulled back, it'll be interesting to see. I definitely wonder what will happen in 6 months. Yeah, I don't think it'll be anything drastic, but I don't think we're going to have that buoyancy we have now, where the market, we're technically in recession now. So it'll be an interesting time. Definitely uncharted territory for a lot of us.
Well, yeah, definitely, and I guess the only thing we can do is just see it out and see where it goes, and that's all we can do.
Yeah, all in the same boat. Just got to see what comes, I suppose.
Yeah.
Hopefully it all comes out well.
Hopefully, fingers crossed.
Yeah.
Thank you so much for coming on to
Anytime.
the podcast once again, and hopefully maybe catch up with you in maybe another 6 months' time to see how things are going.
Yeah, hopefully we have a good conversation about things being really, really good, and just firing away.
Looking forward to it.
Excellent. Thanks, Elliot.
No worries, thanks, mate. Hope you enjoyed that episode. I've got plenty more videos like that up on the channel. If you can check it out, that'll be great. If you did like the episode that you just watched, please feel free to leave a comment, hit the like button, and if you can, please support me by hitting the subscribe button, like the page on Facebook, and I hope to see you in the next episode.